What would cause this to crash? What causes this to break? What really kills this? The true one is massively rising unemployment, negative GDP, and disinflation. In other words, prices dropping. People don't understand when they wish, I want prices to go back. Our economy is based on the consumer, which means prices have to nicely, easily trend up they want to hit 2%, a 2% rate sustained nice over a long period of time. If prices drop dramatically, the whole wheels can fall off of this, and all of a sudden the economy breaks and is not fixable. And we do go into the major recession. So when someone says, I wish prices would go down, please be careful what you wish for. That is the demise of the US economy. A rapid rise in rates, okay? So what the Fed did prove to us when they raised 500 basis points in that really short period of time, the consumer does not like a rapid rise in rates. So a rapid rise in rates caused prices to fall in 2022 for Seattle Metro housing prices. If a rapid rise in rates, let's say inflation reared its ugly head and rates had to be quickly raised again, that would cause prices to fall. They're not responding to the rate, they're responding to the rapid change of the rate. And it goes back to what we were just talking about. That's what creates that fear. And we go into Chicken Little, oh, the sky is falling. And then everything starts to fall apart. A large rise in inventory. P.S. If you're not in the Seattle Metro, you can watch these things in your local area. It will be the same. A big rise in foreclosures.
Aren't we seeing signs of it right now?
We're seeing signs of it, but they're kicking the can down the field. So they're not actually foreclosing on them. The delinquency is happening, but they're not foreclosing on them and bringing to the market. We talked about that in the FHA one. A rise in bankruptcy, low consumer confidence, increased lending standards. So here's one thing that's really interesting. Once again, remember, we're a consumer economy. Real estate is also a consumer economy segment inside of that economy. What's happening for lending standards in real estate right now is if you have good credit, they're making it easy on you. If you have marginal credit, they're actually making it harder on the marginal credit buyer to purchase right now and more difficult. So if the economy stumbles for 90 days, all lenders could increase their lending standards, which would then freeze prices. And if that, of course, became too hard to where that first-time home buyer couldn't enter the market or the move-up buyer couldn't, that doesn't have perfect credit, that takes too much demand away. Overbuilding, not happening here in the Seattle Metro, but in the South. Large parts of the South, there is overbuilding. Speculative bubbles. Once again, you're not seeing these speculative bubbles, but those markets where investors gobbled up 20% of the market, 15% of the market, those could go through speculative bubbles. Politics and elections. So third quarter of 2024, as we roll into fourth quarter and then the election starts to come out, elections cause problems in real estate. It's just fear of the unknown. So it causes the market to slow. This is going to be one of those really bad ones. We're getting the two candidates nobody likes. And so everyone's going to be mad about everything because no one's really happy. And then there's going to be a lot of mudslinging going back and forth. And it looks like it's going to be Biden and Trump. That's going to cause a lot of fighting and a lot of fear. If these new politicians start creating legislation that prohibits housing, that doesn't promote housing, that increases fees to build housing, that, removes economic incentive. If this recession so once again, I feel like we're going to go through some type of mild recession this year. If the recession is not mild and it goes really big, that could be a problem. Natural disasters, okay? That could cause prices to change. And then, global economic factors, shipping, supply chains, China, wars.
This is the big list of watch out for this. It's like the ultimate fear list.
This is the ultimate fear list, but you can see it coming. That's the whole point to this.
You said that you're seeing signs of a lot of these now.
Yes.
Yeah. And even just the politics one, I think a huge majority of the world is going through major political elections.
Yes.
So when there's potential elections that rock the boat, there's policy changes.
Yes.
And then we're already going into this year with 2 wars, I guess you could say.
Yeah.
Right?
Major conflicts.
Major conflicts.
Yes.
And then the signs of some underneath the surface economic turmoil.
Yes.
or potential turmoil?
And I know you do too, this is why we're good friends. I look at and read financial news every day. And what you see in the numbers, in the totality of the data, is you see the bubblings of major problems. And you see them just percolating over here. And what that means is if the Fed cuts way too late, these problems, these minor problems, become major ones. If the Fed doesn't cut, these problems turn into recessions. If the Fed cuts at the right time or even a little too early, these problems simmer down and just go away. That's why a prediction is a prediction, but we have to keep watching. You've got to be vigilant. You got to know the market. You got to know the signals inside the market.
So if things go south, what should investors and buyers do? I know that that's all going to be based off of the situation, but generally speaking.
I think generally speaking, whether things go south or not, this is the type of market where you solidify your position at your job. You go talk to the boss, the manager, you're the friend, you show up, you're nice to all your coworkers, you hang out.
Don't move jobs.
Don't move jobs. Cut frivolous expenses. You may not need Hulu, Netflix, Disney, Paramount, Peacock all at the same time. You increase your cash reserves, increase your savings, increase your liquidity or your access to that cash. And you may have some assets that you may need to sell off in order to get into that position just in case. And then once again, depending on the severity of these, some of these is all bets are off. It's just game over. It doesn't matter anyway. That's just a good recipe right there. Be smart. Don't be dumb. And be cautiously optimistic and conservative.
And data dependent.
Based on the totality of the data.